આજે એક જીએસટી ઓફિસર ચાવડા સાહેબ છે એને લઈને પાર્ટીમાં જવા છે. અરે પણ એને ઓર્ડર મસ્ત કરી આપ્યો. પછી શું હતું ખબર છે, એક અમારા ક્લાયન્ટ હતો ને એના કોઈ ફ્રેન્ડને સીએન લઈને ગયો હતો, તો એણે તો બધું એડિશનનું લિસ્ટ આપી દીધું. વસ્તુ નહીં જતે ज्वार इतना दिखा से तारो फोटो देखे से नहीं है. Okay. Friends, I am CN Nitin Pathak calling on behalf of Isaka chapter Ahmedabad. As usual, we are taking classes on different subjects, including GST. Our main aim is to promote Isaka chapter and the knowledge assimilation, which is the basic for development of India. If India is to grow, knowledge is a power. And we Indians are very powerful in reading and implementing the knowledge. So if you look at the whole world, today the world is divided into very basic remains like in India, China and USA and the rest of the world. Rest of the world is supporting the Indian in growing their economy. China is very strong in infrastructure and manpower is getting older, but their infrastructure is good. Their commitment of manpower is very good. USA running through their muscle power, that is military power. They're making their dollar strong through that. And because of the war between Russia and Ukraine, the whole of other countries are becoming more and more weakened. And only the war is initiated by whom everybody knows it. And so they are also indirectly going to be weakened. And if you look at today, people are more worried about their GST tax planning and GST implementation rather than income tax. So if you look at the figure, the income tax collection is minuscule as compared to GST. And GST has become a backbone of the paper collection trail. Where is the consumption? Where is this? For that, Hiren is one of the best faculty in Ahmedabad. Knowledge-wise, practically he has implemented. He has started practice in GST only. When I was there in practice or when I was studying, there was no GST. Or there was no even service tax also. So because of that, they have very deep, in-depth knowledge. So he's going to talk today on recent update in GST. In addition to that, today, government is giving too much benefit in MSME sector also. Okay. So our recent update in GST would be supported by MSME benefit. MSME may, what are the things? So we request you to contact us to Isaka chapter, Hiren, through his mobile number, which is the download, which is shown here. Contact for knowledge sharing. आपको कोई भी question है, we are ready to guide you. So just with this brief introduction, just contact us for GST query, because we are disseminating knowledge to even CA and professional only. So of course, our main advantage when we take a lecture is we have to read a lot and before delivering. And Diwali is very, very near. Hiren Bhai, in spite of his all tight schedule in office and even in family, he spare a time. So thanks. And with this, I hand over the mic to Hiren Bhai.
Good evening, friends. Basically, As sir has discussed, we are going to take this session on recent updates that we have received during last 3-4 months in GST, and together with that in next session we will discuss certain benefits that MSME sector would have by way of a recent introduced scheme by government of Gujarat, which is Atmanirbhar Gujarat scheme. Today we are going to discuss recent GST updates in 1 hour. I have covered very important aspects only because there are lot many changes in GST, and as far as uh, presentation of today's is covered, we have tried to cover as many practical aspects as every businessman would face in their routine day-to-day practice, as well as CA would face in their clientele. So basically we start our presentation with recent Finance Act 2022 amendments, and which one of the major amendment that would come in section 16 as far as the availment of the ITC is concerned. We all know that the litigation in GST is purely on the basis of ITC disallowability only. There are many cases where we have encountered with the notices where our ITC eligibility is denied. ITC is from the very beginning a very diluted topic. There are many instances where eligibility of the ITC is denied because of certain conditions, and mind well, these conditions are keep on changing. The parent section of claiming the ITC as section 16, which is having the two major amendments. We all know that as far as the GST is concerned, claiming of the ITC depends on the furnishing of the return by the supplier. Where the supplier is uploading his return, he is making the payment, we are eligible to claim the ITC being a recipient. The original introduced system, which was GSTR 1, 2, and 3, was never kept in place. Hence, government tried to summarize and identified certain provisions which are in line with original proposed system, which was GSTR 1, 2, and 3. However, there are many changes in section 16, which is though not as per routine practice of GSTR 1, 2, and 3, but they have tried to introduce such a subsection and conditions by which one have to follow the matching concept before claiming of the ITC. So two very important changes in section 16. One is subsection AA, which says that the ITC which you are going to claim, the details thereof must be furnished by the supplier in his outward supply. So this is nothing but matching of GSTR 2B. Earlier, this GSTR 2B was introduced by way of Rule 36.4, which says that one have to tally GSTR 2A before claiming the ITC in GSTR 3B. However, by introducing the said condition in the parent section itself, now one would say that that condition is coupled in section 16 as well. So when the argument was given by many experts that certain conditions which are not there in the act but only in the rules, that condition will not be suffice in the court of law. Now with introduction of section 16 AA, I presume that now we don't have any stand to say that matching of GSTR 2A is not required before claiming the ITC. Further, the very important change, section BA, subsection BA, that was introduced, and that is section 38, which is the newly introduced section in GST for claiming of the condition. What section 38 it's all about, we will see in subsequent slide. But if I summarize the condition of claiming the ITC, which is new to introduce subsection, which is AA, the compulsory matching of ITC with GSTR 2B, that is your supplier must have passed on the ITC to you, and then only you can claim the credit thereof. And second, that ITC must be supported by ITC which has been floated by section 38. So now we will discuss what is section 38 is all about. Section 38 says that you will be having the auto generated statement containing the details of ITC that will be made available to you. This is nothing but GSTR 2B, and this GSTR 2B shall consist of two details. One is ITC that has been made available to you, and ITC which has not been made available to you. So important point to note here is that section 38(2) subclause B, which says that certain ITC will not be eligible to you even though that ITC is available in GSTR 2B. So what are that sort of ITC? We will discuss that in detail. First point, it says that if your supplier, so mind well before I summarize all these details or these instances which are which are not available ITC to you, but these all details will depend on the compliance of your supplier. So I would say in a lighter tone that while claiming the ITC, you are not only supposed to take care of compliance of your but you also have to take care the compliance of your supplier as well. So here section 38(2) subclause B says that certain details, certain ITC would not be available to you provided one, if your supplier has newly obtained GST registration and certain prescribed period will not be passed. Mind well, subsection 38(2)B is yet not prescribed. The condition thereon, which is the period for which the supplier would be able to claim the credit, recipient would be able to claim the credit, having passed the registration period of supplier is not yet released. But this is the condition which is already affected. The government may introduce certain notification and prescribe the period. So it may happen that your supplier has obtained a new GST registration and they have passed on the credit to you by way of a GSTR 2B. Since supplier has not passed certain period by obtaining the GST registration, you will not be able to claim the credit thereof. Then after it says that if your supplier is continuously defaulted in payment of tax, then also, even though your supplier is defaulted in payment of the tax, the ITC thereof will not be available to you. Third, the supplier might have reported GSTR 1 sales liability, GSTR 1 tax liability higher than GSTR 3B. So if I would say that supplier has reported 100 rupees in his GSTR 1, however, he has filed his GSTR 3B with 80 rupees only, then also proportionate ITC government will set out and prescribe the mechanism by which the recipient would not be able to not be eligible to claim the ITC. But this sort of ITC would not be available to recipient. So in nutshell, I would say being a recipient, your credit will depend on the compliance of your supplier. If your supplier is defaulted in payment, if your supplier has not furnished the return correctly, then ITC thereof would not be eligible to you. Fourth point says that if your supplier might have availed the ITC that is excess than the ITC available to him. So here you are complying with the GSTR 2B matching of your case. So being a recipient, you are matching the purchase transaction with the ITC that is available in GSTR 2B. However, if the same is not followed by your supplier and supplier has availed the ITC in excess, then what is available to him in his GSTR 2B, then that supplier's ITC will not be eligible to you. That's what section 38(2) says that. Further, newly introduced section, amended section 49(12), which says that 49(12) says that there are capping of certain limit by which one cannot utilize the amount available in electronic credit ledger. One of the instances is rule 86B, which says that if you are having certain portion of turnover and you are complying with certain condition, then you can maximum you can utilize 99% of the electronic credit ledger while discharging the output tax. However, if you discharge the tax liability greater than what is prescribed under section 4912, then you may be a person in default. And if your supplier is defaulted and violated the provision of section 4912, then in that case, recipient would not be able to claim the credit from that supplier. And last, government may notify certain prescribed class of person, ITC thereof will not be eligible. So this all about section 38.2. If I summarize section 38, it will be a auto-generated ITC statement, which is GSTR 2B, that contains two details. One is ITC that is available to you, and another sort of detail 38.2B, which is ITC not available to you. I have given certain examples by which the ITC which is not available to you may be floated on that statement. You will not be able to claim the credit. Mind well, the credit is again a self-assessment basis. So that statement will pop up and that statement will float the ITC that is available to you and not available to you. Claiming of the ITC in GSTR 3B is up to the recipient, and recipient have to self-assess the eligible ITC that is made available to him legally and file the form. Third, which is amendment in Rule 37. Earlier, we know that, first of all, let me tell you the purpose behind revision of this Rule 37. Rule 37 talks about if you are not making the payment to your supplier within 180 days, then you need to reverse the credit. This provision we all know. Now there is one change, because as per Rule 37, whatever credit that you have claimed, but value as well as tax portion you are not making payment to your supplier within 180 days, then you need to report additional liability in GSTR 2. However, we all know GSTR 1, 2 and 3 functionalities not come into picture. Only GSTR 1 is there. So one cannot add such liability in GSTR 2. Hence, the suitable changes has been made in Rule 37. However, I would like to point one thing here, that is that might the legislature made a one mistake while drafting this Rule 37, which says that earlier we need to reverse the ITC that is proportionate to the amount not paid. I'm giving one example for your better understanding. Let's say you are supposed to make the payment to your supplier by rupees 100, but you have make payment of rupees 80 only within 180 days. So there is a short payment of rupees 20. Now, if you are not making that 20 rupees payment within 180 days, you need to reverse the ITC that is proportionate to that 20 rupees. However, please read the amended provision of Rule 37. It states that it shall pay the amount equal to the input tax credit availed in respect of such supply along with interest. So that means even though you are not making payment partially, still as per this Rule 37, you need to reverse the whole ITC. I presume that this must not be the intention of the legislature. There may be a drafting error. Suitable clarification or amendment in this rule are expected from the government. Second, ITC reversal and interest thereon. Section 41 is amended. It says that you can claim the ITC, but that depends on the tax payment by your supplier. We have already seen that. But here it may be a case that the supplier is filing his GSTR 3B and recipient is filing his GSTR 3B by claiming the ITC from that supplier, which is the same, which GSTR 3B has the same due date, that is the 20th of the following month. So how the recipient would know whether that supplier has filed his GSTR 3B or not? For that, section 41 says that you need to claim the ITC on a provisional basis. That ITC will be credited into your electronic credit ledger. Now you, in the next month, you need to check whether your supplier has filed his GSTR 3B or not. And if your supplier has not filed his GSTR 3B, you need to reverse that ITC along with interest. Having said about the interest on wrong availment of the ITC, section 53 is also amended, which says that interest on wrong availment of ITC would be applicable only when you have availed the ITC as well as the utilized ITC also. In case you have a accumulated credit balance of ITC and you have just availed but not utilized for making payment, then interest on that particular portion would not be applicable. Interest, mind well, interest would be 18% for wrong availment of the ITC. If you have received any notice for interest on wrong availment of the ITC, then you need to check the portion by which you have claimed the wrong ITC, whether your electronic credit ledger is accumulated with that amount only or whether it falls below that amount. If electronic credit ledger falls below that amount, then only interest liability would arise. If your credit ledger is sufficient enough by which you have claimed the wrong ITC, then you need to reverse that ITC only. Interest would not be applicable in such case. Further, we have received many notices. You must be having many clients who are covered under SGST. SGST has issued many notices based on the scrutiny of the returns. You might have received might have read in today's newspaper also that SGST department has issued ASMT 10, basically, which is the assessment based on the return furnished. And such ASMT 10 would cover n number of points. We will see in subsequent slide as well. But one of the major point therein was common credit reversal as per Rule 42 and Rule 43. Rule 42 and Rule 43 talks about ITC reversal when you have a common supply, that is you are incurring a taxable supply as well as exempt supply. Then common credit you need to calculate according to Rule 42 and 43, and you need to reverse the amount. Many of the person who are doing the exports might have the MEIS license. They have earned that amount duty credit scripts and they are selling the that license, and based on that there would be an exempt supply. Earlier the MEIS license was taxable, but that was later being considered as an exempt and no tax was payable on sale of MEIS license because that was the duty credit script. So now question may arise whether should I need to reverse the ITC on that MEIS license sale or not. And ITC with respect to that MEIS license is considered towards a common ITC or specific towards this that exempt supply. Notices is being issued by the department, and department while conducting their audit, they are reversing the common ITC based on the MEIS supply. It may happen that many of the supplier, many of our client may have only taxable supplies, but just because they have MEIS license sale, their turnover would be composition of taxable as well as exempt supply both. In that particular case, the ITC reversal was required. However, notification 14/2022 was issued, and they have said that for calculating the aggregate value of the exempt supply for determination of the restricted ITC, the value of duty credit script will be excluded. So meaning thereby, as far as when we calculate the value for exempt supply for ITC reversal under Rule 42 and 43, we will not consider the MEIS supply as well. Similarly, on the same point, bank interest earned is also considered as an exempt supply. However, for ITC reversal, we are not considering at exempt supply. So on a similar footing, MEIS license sale will also be having the same treatment. One also change as far as the Finance Act amendments are concerned, which is just introduced on 1st October 2022. It says that cancellation of GST registration was earlier provided if you have not filed GST return for continuous period of 6 months. Now, we know that we have a two category who are filing GSTR 3B monthly and those who are filing GSTR 3B quarterly. So as per the new provision, it is not much relevant amendment, but for your consideration, if you are filing monthly GST return, then if you are not filing your GSTR 3B for 6 months, then your registration may be cancelled. And if you are filing quarterly GSTR 3B, then for 2 quarters, if you not file your quarterly GSTR 3B, then your registration may be cancelled. As far as the composition dealer are concerned, their registration can be cancelled if they are not filing 3 consecutive tax period. That was the earlier provision. Now it says that if you have not filed GSTR 4 beyond the 3 months from the due date of filing, hence that composition dealer registration can be cancelled. Even you can see right now SGST department is also issuing various notices based on the nil return file. And since you are filing nil GST return, it considered the same as business. You are not carrying out the business. And since you are not carrying out the business for last 6 months, your GST registration can be cancelled. So you need to suitably file the reply against that order and file the revocation of cancellation if your business is continued, but due to certain reason you are filing nil GST returns. Thereafter, the order for which you are supposed to file your return, they have said that you are not supposed to file GSTR1 of one particular month if your GSTR1 of earlier period was not filed. And similarly, as far as GSTR 3B is concerned, it says that you can only file GSTR 3B once you file your GSTR 1 for the same period as well as or GSTR 3B of the previous period. Then only you can file the GSTR 3B for particular month. This is important changes which will come effect from which would have come effect from 1st October 2022. It says that earlier when you are having the export, then obviously you are arranging the transportation. That transportation may be from air or vessel. You read the entry, it says that service by transportation of goods from a custom station of clearance in India to a place outside India. So you are having the export from India to outside India. And for transportation of goods, you are availing the service of vessel or aircraft. These services was exempted earlier. Means exemptions were granted every year. Let's say the first exemption was 30th September 2019. That's what extended to 30th September 2020 and further till 30th September 2022. But this year, the government has not continued this exemption and this service becomes taxable with effect from 1st October 2022. Hence, if you are having the transportation of goods from India to outside India and you are sending the goods by aircraft, then 18% would be applicable. And similarly, in case of vessel, that 5% would be applicable. Further, please note that notification 12 serial number 9 again is having the exemption which says that if you are having the service by transportation of goods by aircraft from a place outside India to your place, that is a custom place inside India, then the same will remain exempt as till now also. One beneficial amendment for multi GST and NTD. Many of my friends might have a clients who are having the multi GST and NTD. What happens generally that let's say you have deposited certain amount into one particular GST number, but by mistake that amount is not utilized, or you might have paid the amount by mistake and that remain accumulated in one particular GSTN cash ledger only. Option available with you was to either utilize that amount or you can claim the refund thereof. But in case you are not able to utilize that amount and refund is a cumbersome process, that amount remain accumulated in one particular GSTN only. Now, as with the amendment in Finance Act 2022, it says that between GSTN having the same PAN, please note that that is the distinct person. You can transfer the amount available in electronic cash ledger from one GSTN to another GSTN by way of a filing PMT09. However, please note that ITC cannot be transferred within multiple GSTN. Then after there is section 4912, which we discuss, that the maximum amount that you can pay through electronic credit ledger. It says that at the government will specify certain class of the person who will not utilize the electronic credit ledger beyond certain amount. So government is having certain class, government will prescribe certain class of the person who have a cap of utilizing the electronic credit ledger. As of now, as we discussed, rule 86B is already there, which says that if a person is having monthly turnover greater than 50 lakh in a month, monthly turnover greater than 50 lakh, and there are certain conditions also prescribed. If that condition is not fulfilled, then person can utilize electronic credit ledger maximum up to 99%. That means 1% amount that person must have to pay in cash only. So similar provision section 49 will have in future as and when the government will prescribe. Then after certain extension of the due date, which was for multiple parameters. First, we will discuss the last date to claim the input tax credit. We all know that in GST, there is no provision to revise the GST return. Any rectification of error that you have to carry out in the subsequent month. Since you are supposed to file GST return every month, it may possible that you might having escaped certain amount to be reported in GST return, and hence you have no other option left out but to report the same in the subsequent month return. In this case, the last date to claim the ITC, that is, let's say if we talk about financial year 21-22, then if I have certain ITC to be claimed for the financial year 21-22, that credit can be claimed in 22-23. But as per earlier provision, up to due date of furnishing September month GSTR 3B of 2022-23 or filing of the annual return, whichever is earlier. So let's say if I am not filing my annual return in September, but I will file in the month of December only, which is the last date of filing annual return. So I can claim ITC of 2021-22 up to maximum of 20th October, which was the due date of filing September month GSTR 3B. That is 20th October 2022. Now that date has been amended and extended up to 30th November 2022. Now one can claim the balance ITC which is not claimed for the earlier financial year up to 30th November of the subsequent financial year. But please note that you have to claim this ITC only in GSTR 3B, and before 30th November your due GSTR 3B was for the month of October 2022. So ideally, when earlier as per the amended provision, you can claim the ITC of particular years, previous year's ITC in GSTR 3B of October 2022. Earlier you can claim only up to September month 2022. So ideally we will have a 1 month extra for claiming the ITC of previous financial year. On a similar note, one can raise GST credit note. Please note that there is no bar in issuing the financial credit note. However, if one wants to issue GST credit note as prescribed under section 34, then one would have to report that credit note in either September month's GSTR 3B falling in the subsequent month, or GSTR 3B which was filed before filing the annual return, whichever was earlier. Now that date is also extended to 30th November of the subsequent financial year. So again, one can have the last resort, maximum opportunity to report the GST credit note in the month of October month to the October 2022, if that credit note belongs to financial year 21-22. And similarly, uh, once you file your GSTR1, you can have the rectification of GSTR1 as well, because you might have uh, occurred an error while reporting certain invoices and certain details in GSTR1. That rectification is also, which was earlier allowed up to the September of the next financial year, now that rectification can be up to 30th November. Please note that all these provision, the last due date which was as per the earlier provision was the due date of filing September month's GSTR 3B or GSTR 1, as the case may be. As and when such GST returns get extended, that due date is also getting extended. So there is difficulty in identifying some precise point and precise date by which one can have the amendment. But here, after the amended provision, they have categorically mentioned that particular date only is the last date. So whatever return you have filed before that particular date, that is 30th November, you have the option to suitably amend and suitably report your ITC. One important point to note here that from the 1st October 2022, those who are having the turnover of rupees 20 crores in any of the previous financial year, beginning from financial year 2017-18, then from 1st October 2022, e-invoicing would be applicable. And to count this limit, you need to calculate, you need to consider 2 points. First point, you need to calculate aggregate turnover, that is considering all the turnover that is taxable as well as the exempt turnover. And this limit is from the beginning of the financial year 2017-18. So in case you might not have rupees crossing your, you might not have crossed your turnover is more than 20 crore in the previous financial year, but let's say you have crossed 20 crores in the financial year 18-19, then also you are supposed to have e-invoice. You are supposed to generate the e-invoice from 1st October 2022. And as per the news, government is also planning to have 5 crore limit with effect from 1st January 2022. Revised e-invoice limit is 5 crores. Those who have missed the opportunity for claiming of the transitional credit, we all know that the transitional credit, which was the credit belonging to the earlier regime, that may be the credit of service tax closing balance, excise closing balance, or VAT closing balance, or certain credit that is accumulated in the stock that you have on 30th June 2017. You have an option to claim that credit through Tran 1 or Tran 2. That Tran 1 and Tran 2 was in operational from the period 1st July 2017 to 29th December 2017. But due to system error plus technical glitch, or one would say due to non-aware about the credit to be claimed, many of us might have missed to claim such ITC in Tran 1. Now, with the one of the Supreme Court judgment, they have opened a window, reopened the window to claim Tran 1 for the period 1st September 2022 to 31st October 2022. Between this period, this window will remain open. So identify the case in case you have missed to file your Tran 1, then you can file Tran 1 during that period and claim the ITC. Please note that in case you have already filed your Tran 1, but in case you have encountered an error and you might have missed to claim certain ITC, then you can revise your Tran 1 also. So this facility is for the both those who are filing Tran 1 for the first time, as well as for those who are already filed Tran 1 but want to revise. Similarly, one of the important change as far as the refund for inverted duty structure is concerned. Let me summarize this provision and then we will discuss the formula and calculation. Basically, what happened, there is formula has been prescribed under GST rules. It says that net ITC will consider only inputs. However, input service and capital goods ITC would not be covered under the definition of net ITC. Government is giving you the refund of input tax credit based on this net ITC only. So one would have a refund of ITC which is availed only on inputs but not on services and capital goods. However, we all know that those who are engaged into inverted duty structure, having their business, they have to procure input, also input service and capital goods. But because of this formula, they are left without claiming the ITC on input service and capital goods. So as per the direction of the High Court, the formula has been changed and suitable amendment has been made in GST rule to consider the quantum of input service as well. However, capital goods ITC is legally remained outside the scope of GST refund, which was valid also. But how, as far as the input service are concerned, though the refund of input service is not directly given and considered in the net ITC, but they have changed the formula suitably so that you will have the benefit of input service as well. So what was the earlier formula? Earlier formula, as per the earlier formula, the inverted turnover and total turnover ratio, in inverted turnover and total turnover ratio, you will be eligible to claim the refund of net ITC. But since you have already paid the tax through ITC for inverted turnover, that will be deducted, and rest ITC you will be eligible to claim the credit refund. Sorry. As per the revised formula, they have court said that you should consider whatever tax that you have paid in inverted turnover, you might have utilized the ITC, and that ITC may contain the ITC of input service as well. So here, as per earlier formula, you are only deducting the tax paid on inverted turnover. However, as per the revised formula, you need to calculate the net ITC and input service as well as the input total ITC ratio. And on that ratio you need to apply over tax paid on inverted turnover, and derived amount will be deducted from the eligible refund amount, and net amount will be refunded to you. For your easy understanding, I have mentioned the calculation here. In both the situation, let's say my situation is same and I calculate my refund as per old formula and refund as per the new formula. My refund as per new formula will increase because I will get the benefit of input service ITC, which as per earlier formula I would not be getting. So those who are having the inverted structured refund, please calculate refund as per the new formula and then recheck whether you will be eligible to claim a refund or not. Those who are having the quantum of input service in higher, earlier they are barred to claim the refund for the same because that was not considered. Now those who are having the ITC of input service in a higher portion, they will have a higher refund amount as per inverted duty structure. Now, since GSTR 3B, sorry, I have mentioned 3CD, which is wrong. It is a 3B. You consider the form 3B. This form 3B is having certain important change. We all are filing GSTR 3B from July 2017, and that remain unchanged. We are having a very good grip over filing of GSTR 3B. Now suitable modification has been made under couple of the table. First table that has been amended, that was table number 3.1.1. It says that you need to report the details of taxable supplies on which the e-commerce operator pay tax under 9(5), as well as you need to report the taxable supplies made by the registered person through electronic commerce operator. These two details is applicable for the case who are having their outward supply from e-commerce operator. So mind well, below table number 3.1, you are required to furnish the detail. One table will be filled up by the electronic commerce operator, and second table will be filled up by those who are having the e-commerce operator outward supply. Then this is the original form 3B. It says that 4A is containing the details of the eligible ITC, the ITC that is available to you. First is import of goods, second is import of service, third is RCM ITC, fourth is inward supply from IST, and fifth is all other ITC. After calculating all the ITC that is made available to you, you need to reverse the ITC in table number 4B. That table number 4B contains the two details. One is specifically that you are reversing under rule 4243. That is the common credit reversal if you are having the taxable as well as the exempt supply. And second is the other ITC reversal. Net ITC will be made available to you, and when you file your GSTR 3B, that is credited into electronic credit ledger. D is just a information, it is not a calculation. Whatever ineligible ITC that you need to furnish here, this is the old form GSTR 3B. Now as per new form GSTR 3B, earlier 5 detail will remain same, that is import of goods, import of service, RCM ITC, IST ITC, and all other ITC, but the reversal mechanism gets changed, and that is very important also. First, table number 4B contains the ITC reversal because of rule 38, 42 and 43 together with section 17.5. And second, if you are having any other ITC reversal, then you need to report in table number 4B2, that is others. Net ITC that is made available to you will be credited into electronic credit ledger. Now 4D is also getting changed. They are asking us to furnish the two details. One is ITC that you have reclaimed, which was reversed earlier in earlier table, that is 4B2. And second, the ineligible ITC, but which is under section 16.4 and ITC restricted due to the place of supply rule. We will understand these all tabular data requirement and how to fill in subsequent slide. So we all know that table number 4A, import of goods, import of service, and RCM ITC, IST ITC, and all other ITC, that we all know what to fill. The ratio of filling the ratio and mechanism of filling the details will remain the same. As far as table number 4B and 4C is concerned, we will see this table. In table number 4B1 and 4B2, the primary difference here is that if whenever you are reversing the ITC, that reversal of ITC may be either permanent or that ITC reversal may be temporary. If you are reversing the ITC for a permanent reversal, that is covered under rule 38, that is applicable for the banking company. The banking company and financial institution will have a certain restriction on claiming the ITC, as well as the common ITC reversal under rule 42 and 43. and block credit, which is obvious under section 17(5), which is permanent in nature. If such ITC is reversed, then you need to report in 4B1, and rest all ITC which is temporary ITC reversal, that you need to report in 4B2. So after that you will have a net ITC. So as far as table number 4B is concerned, we are very clear that permanent ITC will be reported under 4B1 and temporary ITC will be reported under 4B2. Now, once you reverse the ITC temporary under 4B2, obviously you will reclaim in future. So whenever you are reclaiming ITC in future, that reclaim will be covered under 4A5, because you need to report the ITC in as per the regular provision only, that is 4A5, all other ITC table. However, whenever you are reclaiming any ITC which was reversed, then together with reporting these ITC under table number 4A5, you also parallelly have to report that ITC under 4D1. You please read the remarks that 4D1 have. ITC reclaim which was reversed under 4B2 in earlier tax period. So this, whenever you are reclaiming ITC which was reversed, that will have a two impact. One will report under 4A5 and second that will be reported under 4D2. So what is 4D2? 4D2 is the reporting of the ineligible ITC that was due to section 16(4), and another is ITC restricted due to the place of supply. I'm giving two examples for your better understanding. You can claim the ITC maximum up to 30th November, that we have already discussed earlier. So if you are claiming any ITC which is beyond the time period permissible under section 16(4), then that credit is remain ineligible and that you cannot claim. Such ITC will be reported under 4D2. And similarly, let's say you are having the ITC which is not based on the your registered location place of supply. Let's say you are registered in the state of Gujarat and you are visiting the state of Maharashtra and staying in the hotel of the Maharashtra. That Maharashtra hotel will charge CGST and SGST of Maharashtra. That ITC will not be eligible to you. Such ITC you will report under 4D2. So that this is all about the revised form 3B and their reporting requirement. Similarly, there are certain couple of important changes. One with respect to the revocation of suspension of registration. It may happen generally that whenever you are not furnishing certain GST return continuously, your registration may be suspended but not cancelled. The difference between suspension and cancel is that suspension is a temporary. When you remove the defects that was pinpointed in that suspension order, your registration will be restored. And cancellation means permanent cancellation. You have to apply the revocation of cancellation application, that was not automatic. Here the suspension due to non-furnishing of the returns, whenever you are filing that return, that suspension was not automatic. You need to approach your jurisdictional tax officer and then apply for the revocation of that suspension. However, notification 14 has been issued which says that the suspension registration for which the registration must not be cancelled but only suspended shall be deemed to be revoked on furnishing of the pending GST returns. Please note that this automatic revocation will only be applicable if your registration is not cancelled, and suspension is also because of the reason of non-furnishing of the return. As far as the e-invoicing are concerned, we all know that certain category of the suppliers who are not supposed to issue the e-invoice, like insurance company, banking company, GTA service provider, etc. Such persons are exempted from issue of the e-invoice even though their aggregate turnover limit exceeds. So how a recipient of such supplier would know whether they are exempted from issuing the e-invoice even though their turnover is increased or not? So for that notification 14 has been issued, which says that such person while issuing the tax invoice, they need to provide one declaration that they are not supposed to issue an invoice as per section 48.4, even though that aggregate turnover exceeds the notified limit. Further, this is also one of the important change with respect to the recredit of the ITC into electronic credit ledger. I am giving one example for your better understanding to understand this amended provision. It may happen that the taxpayer might have claimed the wrong refund, and that refund is also being credited to him also. That refund is belongs to the accumulated ITC. Now, having pinpointed that this refund is not eligible to one particular taxpayer, that taxpayer has already received that refund also. Now, such refund is not eligible, hence that taxpayer need to provide that back. Hold on. It may possible that the supplier who have received the wrong refund, he is depositing that wrong refund along with the interest to the departmental authority. However, that refund is not being recredited into electronic credit ledger. So that is the dual impact on the taxpayer who are who insisted to reward back, that is refund back that wrong received refund. So taxpayer has already provided and given back that refund, but that amount is not credited into electronic credit ledger. So the provision has been suitably amended. It says that when the wrong refund is received by the taxpayer, and then the taxpayer has the option to deposit this refund with the authority, and whenever such taxpayer deposit the refund, then refund deposited shall be recredited to his electronic credit ledger by proper officer, and that proper officer has to issue a form PMT03A, and such wrongly received refund will be credited into electronic credit ledger. Two new mode has been provided for payment of GST. One is UPI, one is IMPS. Still, I doubt that these both are not functional yet. Whosoever is claiming the refund of supplying to SEZ officer, the provision was that such refund will only be granted to supplier of SEZ unit only when the SEZ unit or SEZ officer, proper officer, or you can say specified officer of that SEZ endorse such documents that such goods has been received by them. Now that specified officer as per SEZ rule was joint or deputy or assistant commissioner of custom only. That was the higher authority. So taxpayer is having the issue while getting authorized by such SEZ officer. To remove this issue, to remove this difficulty, now proper amendment has been made, and as per the amended provision, now SEZ officer would also include inspector or preventive officer or appraiser or the superintendent of custom posted in SEZ and authorized by the specified officer to discharge any of the function under this rule. So now the lower category officer is also being empowered to uh, to to have the authentication that the particular supply is for SEZ operation only. As far as calculation of the export turnover is concerned, the explanation has been added to Rule 89.4, which says that the value of the goods exported shall be taken as FOB value or the value that you will declare on the tax invoice, whichever is lower. Generally, it happens that whenever you are claiming the accumulated ITC refund as for zero rated supply, that is the export, the allegation of the department was that the value adopted by you was not correct, because the value that you have adopted may not be the FOB value but the higher than that. Here it is clerical explanation has been clarified in rule 18 rule 89.4 that while applying for refund of accumulated ITC as far as your zero rated supply is concerned, to calculate the zero rated supply you need to consider FOB value only, and in case you have prepared the invoice below the FOB value that is mentioned in tax invoice, then you need to consider the lower of these two. We all know that GSTR 9 and 9C for 2021-22 is due on 31st December. There are no other changes as far as Form GSTR 9 and 9C is concerned for financial year 2021-22. All the provisions and all the instruction for filing GSTR 9 and 9C will remain the same that was earlier. Only two changes are there. As far as reporting of the non-GST supply exempt and nil rated supply was concerned, till today, whenever you are filing GSTR 9 for financial year up to 2020-21, you have an option to either report individually, that is non-GST supply, exempt supply and nil rated supply, or you have an option to report all these turnover into one particular row only, which is exempt supply. But for financial year 2021-22, you need to report non-GST supply separate, and exempt and nil GST supply you can have the option to report as exempt supply only. As far as the HSN summary reporting is concerned, till financial year 2021, inward and outward summary both were optional. Now HSN summary of outward supply is mandatory for financial year 21-22. Certain provision of direct recovery which I would think that you should consider as far as section 17.5.12 is concerned. It says that whatever, notwithstanding anything contained in 73 and 74, whenever you are self-assessing any tax liability in GSTR 1, however, that liability will remain unreported in GSTR 3B, then it considered as a self-assessed liability, and since it is a self-assessment tax, you are supposed to pay tax, and provision recovery shall be made under 79. So there is no need to have a adjudication process. Direct recovery can also be possible. So please check whenever you are having a difference in turnover and difference in particularly tax liability, if you are filing GSTR 1 and filing GSTR 3B, differences if any. However, together with that, one should also read the instruction that was being issued. It says that proper opportunity of being heard to justify the difference must be granted. So make sure your GSTR 3B and GSTR 1 go line in line. How can you plan a tax as far as your GST tax is concerned? So you have to check following certain criteria of your clients, and you can guide them for better tax planning and for better compliance of GST as well. First, you need to check if your client is having accumulated ITC, then it may possible that they might be eligible for refund under accumulated ITC of refund for zero rated supply, or accumulated ITC refund for the inverted duty structure. If they have accumulated cash balance, you can transfer it through PMT09 between the distinct person we have just discussed. In case you are having the multi GST and entity, for branch transfer, you can take the advantage of Rule 28 proviso, which says that for branch transfer, you can have any value provided your recipient is eligible for the input tax credit. Multi GST and entities would also have to cater the requirement of input service distributor and also the cross charge if they have certain common supplies therein. Whenever you are having accumulated ITC, whether you want to opt for with payment of tax or without payment of tax, that will also depend on the tax planning that you can have. In case you are having the accumulated ITC because of the capital goods, then you cannot claim that ITC refund through export without payment of tax. However, export with payment of tax is no bar for claiming the refund of such ITC. We have already discussed the revised formula for inverted duty structure refund. You can take the benefit of revised formula and eligible refund, which is in excess to earlier formula. Since there are many notices which is our subsequent slide itself, that is being issued in case you are having a difference between GSTR 3B and GSTR 2A, then you need to check whether you are having any uh, ITC reversal requirement or interest on excess ITC claim. Generally, as we have discussed, that ASMT 10 notices is being issued. They are having n number of points. Certain points based on the notice that we have received, I have listed here, which is very obvious. You can just go through it and you will know that what are the instances for which you should be ready with in case you are having the such kind of notice. One, it says that whenever you are having difference between the various GST returns filed by you, that is GSTR 3B and GSTR 1, or you are having the excess ITC claim that is in excess to GSTR 2B ITC that is available to you. Whenever you are having the uh, late filing of GSTR 3B, then you need to consider the interest liability as well, because that it may possible that uh, uh, GSTR 3B late filing will encounter an interest liability if you are having the cash payment. Similarly, if you are not making the payment to your suppliers within 180 days, that case is also being issued, that case is also being flagged in ASMT notices. And similarly, in case you have a composition of taxable as well as exempt supply both, then ITC reversal may be required. Various e-way bill report is also, they are also having the data for e-way bill report versus GST return file. So justification is required from your side that number of e-way bill that has been generated by you as against the number of invoices that has been reported by you in GST returns. So these also are the some of the cases where due to the, because they have a multiple source of information, they are asking for the differences and justification thereof. In case you are having the certain GST credit notes by which you are reducing your GST liability, then they are asking the justification and whether your credit note is in compliance with section 34 or not. Similarly, the SGST is also flagging one of the point whether you have complied with rule 86B or not. That is whether you have uh, paid your tax liability by utilizing electronic credit ledger more than 99%, and if yes, whether you are falling under the exceptions to rule 86B or not. GSTR 9 and 9C various tables that you have provided, the clarification is asked whether you have correctly reported the figures in GSTR 9 and 9C. I would take one example that reconciliation difference is being reported under GSTR 9C, table number 50. So whenever you are reporting any information in GSTR 9C table number 50, then the details is required from your side, whether how you have derived this table number 50 and why you are not liable to pay tax on the amount reported in table number 50. They are also asking the difference and justification for increase or decrease in the turnover. Similarly, if you have paid, if you have utilized the regular ITC only and not making the cash payment in a much higher portion, then also they are asking the explanation. And in case you are having the cross year transactions, and let's say if you are reporting any transaction for 21-22 which you have reported in 22-23, then they are asking the clarification and reconciliation for the same. So whatever I have discussed here is my opinion. We all know that there are numerous of changes in the GST are there. We might have the difference of opinion, but in case you have any clarification on questions, then you can very well contact us, and this presentation will be shared to you. Sir will share this presentation over their social media also. And in case you have any questions or query, you can definitely contact us. Thank you. Thank you very much.
Good evening, friends. Uh, Eden, as I was listening from other phone, it was a wonderful talk. I enjoyed like anything. So much depth of reading, knowledge, application of knowledge, and practicality of the work. Which you can, when you listen, you can have a very lucid understanding of all the four. And I really congratulate India, because India is the world's brain population now, and Hiran is one of the example of it. How India is going to grow fast, and which is one more lecture which is going to be. I think there would be Diwali. After Diwali break, we generally we take it on Friday, 6:30, and we share it on social media also, so that you can be contacted. You can contact us for the same. You can register so isaka.org and cnmpathak.blogspot.com, and you can contact Hiren at cmsar.com for any query regarding GST. And we are going to have a very depth understanding and issues which is MSME arising. What are the subsidy you are eligible? What are the things you are likely to get it because of this MSME benefit? We are going to take later on. And I am a immediate past president of ISACA chapter Ahmedabad. Any issue regarding ISACA, you are most welcome to have the advantage of this. With this, we conclude today's session. Have a nice time. Have a nice happy Diwali and very good and prosperous New Year. And again, I clap for Hiren for this wonderful talk. Thank you very much. We are concluding now, sir. Totally.